Through what's going on more broadly at the moment. Pete McGuire joining us from XM. Pete, I hope you had a good week. What are you watching for at the moment? So, what did you take a look at that SOMP report?
Yes, Andrew, and I'll tell you what, it's been, if I'm watching anything, it's been the tail off as far as Aussie dollar in the last 7 days. And you're looking at, over 71 to just under 69, sitting at the moment about 69 and a third. So, yeah, it's been very volatile. I think traders globally have been enjoying it. It's been a dynamic week for currency trading, and the US dollar continues to climb. And Carl's comments earlier, it's probably got more upside. So, yeah, it's been a dynamic week to trade currencies.
Yeah, what's going to be pivotal for the US dollar coming up? Clearly, I mean, we do have that all-important inflation read out of the States next week.
Absolutely. I mean, you're sitting at 103.30 for that US dollar index. So I won't be surprised to take maybe a 103.70, 103.80 by early next week. I think there's just general momentum to the upside, so that'll be softer for the Aussie. Some of those other currencies, I'd say, yeah, maybe a bit of play there with also euro, yen, and the pound. So, yeah, game on over the next couple of days.
Yeah, of course, we saw that this time last week. We had that surprise jobs number. Are you perhaps wary of a surprise in that inflation figure next week?
Yes, I am in a lot of ways. I mean, when you're thinking about that, consensus was 185,000. I watched the drop, and then all of a sudden, boom, 517 came in. So, yeah, it's very hard to pick it. So all the analysts from all the big banks globally and the top economic forecasters were only out by about 200%. So as far as inflation's concerned, if with a full unemployment number, we're going very, very strong there for headcount and so on. I won't be surprised to see it uptick, but yeah, we've just got to see what happens. I'm not prepared to put a finger in the dike at the moment.
And Pete, clearly the Reserve Bank somewhat spooked by that December quarter CPI.
Oh, 7.8%. It's frightened everyone. It was 7.4, I think, the month before, and then 6.1, I think. So it was a dramatic increase. And everyone was saying, you might see, some bullish analysts, 8% by Easter. Well, we're nearly there now, and some are even saying you're going to see 8.5% to 9% by Easter. So that's not a good sign domestically, and our RBA governor's got his hands full. So it's going to be a fascinating ride in on the second quarter, how that all plays out. We're going to get through the first quarter to Easter. So, it's going to be game on.
Yeah, so what, 4.1% terminal rate now priced in? You think that's where we're heading?
Yeah, I think so, Andrew, but I wouldn't be surprised, possibly even further from there. I just want to see what the Fed's prepared to do, what the numbers are going to produce. Naturally, Eurozone, Bank of England, both hit it up 50 basis points last week. So I'm just sitting here observing it all. It's hard to really come up with forecasts because it's so volatile. You just need to be sitting on the edge of your seat, watching the screens, and be appreciative of these big intraday changes. And there's no shortage of opportunity.
Pete, I know you've always got your eye on the energy markets, and we have seen that downward pressure on oil prices of late, of course. And I was looking at gas. Those prices having tumbled more than 40% since the beginning of the year.
It's been wonderful. I mean, from a consuming point of view, Andrew, and that very warm winter period in Europe. So that's been a plus, and that really hasn't. Imagine if it went the other way and you had worse cold or frost, then it would have had a massive draw. But as far as consumption, so energy prices, I'm just looking here, 84.25 for Brent. It's edged back up and it's off that $88 level, but it's been again incredibly volatile over the last week and a half. 88 down to about 80, then back up to 84.5. So yeah, there's no shortage of opportunity again across the energy complex. And I'm watching gas, but it's a wild bronco to trade that NYMEX gas market. So I think there's better ones to trade like WTI and Brent for crude oil.
Indeed. Pete, just back to inflation outlook. It's interesting that you would have seen overnight that German inflation is coming down, I guess in part because we are seeing those energy prices fall.
Absolutely, Andrew, and they're a big consumer. I mean, the number one country as far as growth for Europe, so that's a good sign if you've got that inflation dipping in Germany. That's a plus. Though it's a big composition as far as the Eurozone with 20, I think there's 20 members. So it's a good sign. I'm not going to tip cold water on it. It's good to hear, and let's just see where we are over the next month or two. We've just got to keep energy prices down. You don't want any geopolitical hotspots. You don't want anything out of left field to really ramp energy up to $100 a barrel, because that's not where we want to be. And yeah, we've just got to keep an eye on all of that.